Former RBI Governor Raghuram Rajan has found himself at the receiving end of the Finance Minister Nirmala Sitharaman's anger once again. This time, Sitharaman was speaking at a conference in New York where she responded to Rajan's comments on the Modi government's handling of the economy, saying public sector banks went through their worst phase during the combination of Manmohan Singh as Prime Minister and Raghuram Rajan as Governor of the Reserve Bank. Now, Rajan took on the top job in the Reserve Bank in September 2013, just months before the Modi government first came to power in May of 2014. Raghuram Rajan did not get an extension of his term and stepped down in 2016. Since then, he has criticized the Modi government's economic policies a number of times and has recently said that the centralized nature of the government's leadership has led to an economic slowdown and a stop in reforms. The finance minister's response were in the context of this particular comment. Is the finance minister's claim then that public sector banks and the mess we see today is courtesy the Rajan-Manmohan Singh combination? Joining us on the debate today are Pranab Sen, former member of the Planning Commission, Nirupama Soundarajan, head of research at PIF, Sandeep Parekh, founder of FinSec Law Advisors. Welcome to all of you and thank you for speaking with us. Mr. Sen, let me begin with you and the contention, which is not a new one, that the public sector bank mess is due to phone banking, as it's being called in political terms, and also due to the lax policies during UPA 1 largely. But this time round, the finance minister is identifying one specific period where we had a combination of Manmohan Singh as Prime Minister and Raghuram Rajan as the RBI Governor. What do you make of those comments?
Well, you know, this is really a case of shooting the messenger. I mean, if Raghuram committed a sin, the sin was forcing the banks to start recognizing their NPAs, which they had been suppressing for the past decade or more. And as a result, the extent of the mess started becoming clear. It started in 2013, but it really picks up pace in 2015. And it's in 2017 that the NPA ratio goes to its highest. So it's basically Rajan simply forced the banks to recognize their bad assets. Now, if he is to be held culpable of creating those bad assets, that is stretching the one's credibility, credulity a little too far.
Ms. Nirupama, why don't you come in with your point of view? Now, Raghuram Rajan himself has said that most of the mess, and he said this in front of a parliamentary committee, most of the mess started in 2008, between 2008 and 2011, if I'm not mistaken. So during UPA 1. But is Raghuram Rajan also part of this mess, and should he also be apportioned blame?
I will have to agree with Professor Sen. I don't think it's right in blaming Raghuram Rajan. In fact, it's only because of him that we were privy to the kind of mess that the banking system was in. If he hadn't really done what he had and forced the banks to declare their bad assets, we would all be living pretty much under a very, very rosy-eyed kind of world, and that's not what you really need. So I don't think it's right to blame Raghuram Rajan. However, having said that, I do think that the Ministry of Finance of the then government does play a role in terms of what has happened, but I don't think one can blame Raghuram Rajan.
Okay, Sandeep Parekh, let me come in with your first comment. So, this criticism was aimed at a combination of Raghuram Rajan and Manmohan Singh. We'll come to the UPA years in a bit. Let's come to Raghuram Rajan first, because he's been pretty vocal in his criticism of what's going on with the Modi government and his economic policy. So, in a sense, this retort is part political as well.
Yes, I think it's completely political because it's a political retort to a political statement made by Rajan, really. So I see it in those terms. And I think what she's alleging is not that he himself was cause of the banking problem, but I think she's saying that you're part of the part of the elite at that point of time, which this particularly, I don't think she's blaming Manmohan Singh also, but they're basically saying that they allowed, in a way, morally they allowed these things to happen. So I think that's the political point that she's making, and I think. In terms of crony capitalism, I think we are certainly not as much with banks, but generally speaking, I think we've seen a lot of crony capitalism which has been unearthed, is particularly from UPA too.
Full answer there, but I think Sandeep, the finance minister's criticism is very specific. I'm just quoting what she said. It was in Rajan's time as governor of the Reserve Bank that loans were given just based on phone calls from crony leaders and public sector banks in India. Till today are depending on the government's equity infusion to get out of that mire. She's talking about a very specific time. She also says, I'm grateful that Rajan did an asset quality review, but I'm sorry, can all of us put together also think of asking what ails our banks today? Where has it been inherited from? So let me come to then the second part of it, which is where did this all start from? And I'm coming back to Pranab Sen. I'm also opening up the debate. If anyone has a point to make, please indicate. I'll come to you. The narrative so far, Mr. Sen, has been that post 2006, 2007, and more after the economic downturn at 2008, banks became very free and footloose with who they were giving loans to. They were happy to cover up bad debts, evergreening of loans, etc. And a lot of this now politically has been linked back to a corrupt government in charge. How do you look at these allegations in the context of where we see public sector banks heading today?
Well, the history of the banking problems is a little older than that. It really begins after 2002. What people forget is that the Indian banking sector, by the banking laws, is not designed to be universal banks. They are designed to give working capital loans and retail loans, period. Now, what happens is that after 2002, in 2002, all the development financial institutions which used to give long-term loans shut down or converted themselves into banks. The net result was that we had this complete vacuum in the space for long-term lending, and the banks were forced to step into the breach without any change in the regulatory environment that controlled them. Now, this was really the original sin. Now, once the banks started lending for long term, and by the way, the rate at which this has happened is staggeringly high. If you go back into the data, you'll find that in 2002, about 75 to 76% of bank credit was working capital, and the remaining 25% odd was retail, including housing. In 2018, the working capital lending of banks has come down from 75% to 38%, and long-term loans have gone up to 42%. So essentially, it's the build-up of long-term loans, which the banks were not designed to do, is, to my mind, really the root cause of the mess. Now, a large chunk of this also, of course, has to do with the fact that this was precisely the period post-2004 when the public-private partnership began in the infrastructure sector, and the only place that the private infrastructure developers could get money was from the banking sector. So the banks suddenly were lending to infrastructure for which they had absolutely no competence to evaluate the loan proposals. This was really the beginning of the mess. And yes, there was evergreening, and the evergreening just kept on happening and happening and happening until Raghuram put his foot down on it. Okay? So what you're seeing today, the 10.5% odd NPA levels that we had hit, now it's down by about 1 percentage point, is really an accumulation of evergreening over a decade. It's not something that happened in a very short period of time. So, as I said, the root cause is that the banks are forced to undertake activities that they are not geared for, either legally or in terms of their own internal competencies. And unless both these problems are fixed, this is a problem that's going to recur over and over again.
No, but Mr. Sen, are you being a little kind to the political context of this? Yes, banks were perhaps loaning, like you said, to infrastructure projects where they did not have the capacity to evaluate. But the charge is of crony capitalism. The charge is, there's a quote of Raghuram Rajan saying that, he's talking about a conversation that was related to him about PSU bankers walking around waving checkbooks, saying, tell me how much loans you want. We have to look at it from the governance context. Because today you have public sector banks bleeding, and once again the government in charge is being questioned about their policies.
Well, I mean, that's the point. Of course, it's political. If you're talking about crony capitalism has existed in Indian banking system ever since the banks got nationalized. So there's nothing new in it. And to say that crony capitalism was higher or lower in one period or the other requires a much more detailed analysis than the finance minister has clearly done. So, crony capitalism is a reality, and if anybody is under the impression it's gone away today, they're very sadly mistaken. However, that's not really the point. The point is that even with crony capitalism, if the banks were being able to do their job properly, things would not have come to such a pass. The point is the banks were forced to do lending activities that they were not designed for. This is not a new point. The point is this government has been in existence for 6 years nearly, and they have done nothing to fix this problem.
Okay.
That is really the issue. That unless apportioning blame is easy, but actually fixing the root of the problem requires first an understanding of what the nature of the problem is, and secondly, how to fix it. Neither of which has been done. There has been no real analysis of the nature of the problems that banks are facing. There's a lot of finger pointing.
All right, it's an important point. Nirupama, would you take that forward and respond to that? Do you think there's a lot of finger pointing? Because the basic...
Yeah, please.
Yeah, please go ahead.
Actually, so no. So I think there are two things that I want to say here. So the fact of the matter is that the public sector banks, right, when one nationalized the banks, I mean, they had a different kind of role envisaged, because they were supposed to actually cater to a certain kind of lending to certain kind of sectors with certain kind of priorities that the government at that time believed that private sector banks wouldn't. It's the same argument as having public sector enterprises in India. Now, the fact of the matter is, over the years, crony capitalism, of course, has come in, and there has been a lot of interference as far as how banks would lend is concerned. So obviously phone calls were made, loans were sanctioned, not on the basis of credit worthiness, but because phone calls were made. Now, this is very true, and I think there's a large part maybe that may continue today as well, maybe in more hushed kind of circles. But the fact of the matter is that while there is abundance of this that has happened, the other fact is also that banks did get lazy. Banks got excited and banks also got lazy. They did not really step up, or they did not really do their bit in credit assessment. They relied largely on credit rating agencies, and we all know what happened to credit rating agencies and what, after the crisis, the global crisis. Now, when you do that, obviously the asset quality started to deteriorate as far as they're concerned. The other point is, I also believe, and I agree with Professor Sen here, I think, when he says that there is a lot of pressure on the banking sector. Now, typically any economy is funded either through the banking sector or through capital markets, or a combination of both. Ideally, it should be a combination of both. India has always relied on your banking sector as far as funding growth is concerned. We don't use our capital markets at all. In fact, very few and far between bond releases, and quite frankly, even your IPOs in terms of your stock exchanges are not really places where capital formation takes place. So when your state finance corporations and other lending agencies which are supposed to take care of long-term lending don't really pan out or are not feasible, then the reliance on the banking sector is too high. And eventually, I think it's only natural that they will all crumble under this kind of pressure.
We'll take a very short break at this point, but when we come back, the real question at the end of it all and beyond the politics, what do we do now with our public sector banks? Should we keep pushing taxpayer money and keep recapitalizing them? What are the solutions ahead? We're focusing on the solutions when we come back after this very short break. Let me get Sandeep in. It's been 6 years since the Modi government was in charge. So they have put in more money into banks. Recapitalization is at massive levels, record levels in fact. The process that Raghuram Rajan himself put into place of asset quality review still goes on and has led now, as per RBI norms, to massive write-offs. The last figure is over 5 lakh crore rupees. And you are now pushing public sector banks to lend more in the middle of this slowdown. What do you think of the prescription in the Modi government's tenure?
No, so I think this government has limited options because, as you yourself said, there's a contradiction in terms of trying to sink more money into public sector banks at this stage when NPAs are still, we're still uncovering NPAs. It's not as if 2016 we had a kind of decisive disclosure of all evergreening. So I think that process is still going, and at the same time we are in the growth is slowing, and therefore a lot more money needs to get into the system. So I think it's a tough position for the government. But just to kind of on Dr. Sen's point, I'm not completely in agreement with this perspective that all the problems were in the infrastructure sector. In fact, if you see, most of the corporate sector problems were in working capital loans which are made. All the headline issues besides IL&FS, if you see, they're all regular loans to corporates for 2-3 years. They're not 20-year loans we're talking about. So I think the rot was there. Let's acknowledge it. Let's acknowledge it's not just crony capitalism in the banks, but I think the underlying itself was kind of pretty rotten.
You want to respond very quickly, Pranab Sen, Professor Sen, to the point that he made? I'll come to you, Nirupama, just because he spoke specifically about a point that Professor Sen made. Would you like to respond?
No, I mean, I didn't say the entire problem was caused by infrastructure, but that's not really the issue. It was caused by the lending pattern that developed post 2002. That was the point I was making, of which infrastructure was a brand new element. It had never been there before. All infrastructure prior to that used to go from government budgets. So that was the simple point. So I don't think we are in fundamental disagreement.
Okay. Nirupama, I want to come to you, and I know you want to respond, but I just want to add one more perspective to this discussion, which is what the finance minister said in the same conversation about a very specific sort of criticism by Raghuram Rajan about the centralized leadership of the Modi government, which in his view has caused a lack of implementation of reforms to the extent that it could have happened. To which he says, I'd like to say that a very democratized leadership led to a whole lot of corruption. The Prime Minister, after all, is the first among equals. I just want to bring that perspective into the debate as well, because she makes a very important point. She says you need to have, in a country as diverse as India, an effective leadership, a rather too democratic leadership, which probably will have the approval of quite a lot of liberals, I'm afraid, left behind such a nasty stink of corruption, which we are cleaning up even today. So I'm broadening the scope of debate, Nirupama, and coming to you on that particular point of contention. Because Raghuram Rajan is not the only one who's made that point, that if all power rests with the PMO, decisions are being made by them. Does that slow down the process?
So I think there are two things here. So first and foremost, if I can respond to the earlier question of what what the government really needs to do now. I think the first thing the government probably needs to do is not really push too many new products down the throats of public sector enterprise, public sector banks in terms of lending. They have to be a little more cautious about what kind of products that, in terms of targets, what is given. Because, between 2017 and 18, if you look at it, notwithstanding everything else, the interesting statistic is the fresh additions in terms of NPAs has actually gone up from 3 trillion to 7 trillion. That's the largest jump that has happened. And I think this is the reason for most of the conversation, because now one is wondering, why is this the case? Which then leads to the question that you're asking in terms of centralized leadership versus one that happens everywhere in terms of corruption. Now, I have a slightly different take on this. The fact of the matter is, every person at the helm has their own style of running governments. Now, in terms of whether, it is a more centralized form of governance, or whether it is spread across other places.
Professor Sen, you want to come in on that point of, reform implementation and even style of functioning. And it's an important point, because through the UPA years, and especially during UPA 2, the refrain we heard was of a weak PMO, extended to a weak Prime Minister. One who didn't seem in charge of all the decisions that were being taken. Now we are contrasted in the second term of the Modi government with a very powerful Prime Minister and decision making centralized with the PMO. Often it may seem at the expense of what various ministries want to do and implement. Just to comment on those contrasting styles and what they mean for reforms and policy making, especially in the context of public sector banks.
Well, again, the point that Nirupama is making is perfectly valid. If you really look at our own history, the last time we had this kind of a solid sort of strength at the center was during Rajiv Gandhi's tenure. Now, that wasn't exactly one of our most glorious periods of economic history. So, just having centralized strong central government doesn't necessarily make it better or worse than a more democratic government. The Narasimha Rao government was one of the weakest governments. The Vajpayee government wasn't a particularly strong government either. So, to simply talk about whether more centralization or less centralization is good or bad, I think really misses the point. It really has to do with the character of the government and the way in which it works. Yeah. I think UPA 1 is a very good example. UPA 1, the Congress was again, it was a coalition, but there was a stabilizing force that was offered by the left parties. They acted as conscience keepers. They didn't do very much, but they were at least there as conscience keepers. UPA 2 lost that particular anchor. So, this is something for political scientists to take up. I mean, economists like me can only give the layperson's view on the matter.
Yeah.
I think you really need to get political scientists.
It's all a bit of a mishmash right now, right? Because you have top economists talking about centralization of leadership, from Raghuram Rajan to Abhijit Banerjee. So I don't know if you can really escape that comment, but no, I get your point, Professor Sen. Sandeep, you want to come in on this point?
The fact is, economists love to talk about everything.
That's true. That's why they make excellent panelists. So always welcome to the show. But Sandeep Parekh, you want to come in on that point, and the fact is that the biggest political story right now still is what is happening with the economy. And public sector banks is a very big part of it, because it's a very painful area. The fact that the finance minister felt the need to respond to Raghuram Rajan's comments and defend her moves on public sector banks at this forum shows what a big pain point it is.
Sure. No, so I think I broadly agree with Dr. Sen, but to the extent it's not dispositive, of the outcome. Whether you have a centralized mechanism or a very, very kind of diversified and no center of gravity kind of government. But, ceteris paribus, as we say, if all of the things being equal, I mean, you do need a strong head, but at the same time, I think they're compared to this government, I would at least prefer a much more empowered set of ministries who are able to kind of take decisions.
Let me come to you, Professor Sen, on some of those comments and options that have been made. Is it time to take some really harsh steps as far as public sector banks are concerned, instead of pushing more taxpayer money into them?
But this is precisely the issue, which is, again, we continue to think that the framework within which the banking system operates is written in stone. It isn't. It's a piece of paper. It's called the Banking Act. What we really need to do is simply recognize a reality which has been around for more than 1.5 decades, and that is that Indian banks are operating as universal banks and not in the old Anglo-Saxon tradition which our laws provide for. There is one specific lesson I think we can learn from countries which have universal banks, which are countries like Germany, Japan, and several other countries. Europe is mainly universal banking. And that is that if a bank is going to be a universal bank, that is, you are not segregating between term loans and working capital loans, then banks should be allowed to raise money issuing bonds for on-lending purposes and not rely only on deposits. Now, that is something we need to move to as quickly as possible. The fact is, we are not even discussing it. We are not even trying to learn lessons from countries which have had a much longer experience with the kind of banking we are asking Indian banks to do. At least let's start the process. Let Mr. Sitharaman actually read some of these banking laws of countries which have universal banking.
Okay, last word from Sandeep on what should be the way forward, and of course at no point am I suggesting that shut down functioning banks and create panic, but the larger point of, let's not keep, do we really need these many public sector banks in this day and age, and is just merging them or grouping them going to be enough?
Yes, I think as Nirupa said, I think merger is just first step. Ultimately, I think it will create some economies of scale and some efficiencies. But ultimately, I think public sector banks will need to shrink. With essentially, when you have so much NPAs, I mean, either you recapitalize them, which is happening to some extent, or the other option is to shrink the asset and liabilities. So my guess is it'll be a combination of the two, and I think an economy like India probably needs not 67% of the banking system being public sector, but probably in the region of half, because the kind of loans which public sector banks make, all the highways and infrastructure projects, which even today vast bulk of those are made by public sector banks. The political calls which honest political calls which are made to lend to these segments, I don't think private sector banks are in that space at all. So I think public sector banks should shrink a bit, but certainly they should exist. I don't think the Air India argument is there to shut them down or kind of privatize them completely.
Okay, absolutely. A lot of food for thought. So we've taken the opportunity of this pretty spicy comment and retort from the finance minister to look at the state of public sector banks today in a little bit of detail and compare them from what happened in the UPA era. Of course, the government of the day and the way they deal with public sector banks and their lending matters. It provides a bigger context to what is happening, but it's not all about politics. It also depends on what the situation of that time was. Did public sector banks need to lend more post the 08 global crisis? Did the decision to not allow banks, which took place in the beginning of the Modi era, but under Raghuram Rajan, to not allow them to sweep the dirt under the carpet, lead to the problems we see visibly today? Possibly yes. Was it very much required? Also possibly yes. So we need to go beyond that to see how we can fix a very important component of our economy. With that, I want to thank all of you for joining us on the India Development Debate this evening. We'll be back tomorrow, right here, same place, same time.